And welcome to another episode of the Trucking Risk and Insurance Podcast, where we talk about trucking, trucking risk, and trucking insurance. So with that, Mr. John Farquhar, my co-host, take it away.
Hey, thanks, Chris. How you doing? So we have a special guest today. I don't know if you know who she is. She's a nice lady. Her name is Lisa Arsenault, and she's with Stabler Insurance. And interesting enough, Lisa has been in the industry 35 years, but is only 36 years old. Amazing. I want to know what you're doing. I want to know what you're doing. How do you stay so young, Lisa?
You know what? Filters are wonderful. I'm not going to like this in-person meetings when we get back to it.
No doubt. So anyway, so we're going to talk about some insurance stuff today. Chris.
I was going to say, we've gotten back to in-person meetings, Lisa. I saw you just a few weeks ago at an in-person event. And then we had to go play whack. Well, I can't say that. We had to go play golf. Had to go play golf.
Yeah.
Well, funny enough, during the pandemic in 2020, and of course this year as well, the only way I got to do anything in person was golf. It was with other insurance colleagues, clients, and prospects. So, I mean, for all of the rigmarole that we've gone through and everything, golf was considered safe. And that's how I did in person for a year and a half.
Cool.
And hey, it was outdoors, so it was perfect.
Yeah.
So
you got to do some things, somebody's got to do the hard work.
Yeah. Well, because the rest of us are slackers at 35 hours a week.
Well, yeah, that's kind of an insight. If somebody didn't watch your podcast this morning or your live cast this morning, that was funny. Yeah, saying you work 50 hours, 50, 60 plus hours, and then you went to work for an insurance company. It was drilled down to 35, and I'm like, whoa, part-timers.
Yeah.
Hey, that's what I was asked to work, and I did it. I don't think there was a week that I actually worked 35. It was always 40 plus, just because.
Oh, for sure.
But anyways, we are talking about insurance today and how to game the system.
No, how to not game the system.
Oh.
So close, Chris. So close.
I liked it better my way. If I was a trucking company, I want to know how to game the system.
Yeah, you don't want to game the system if you're a trucking company. Game the system has a very negative connotation.
And why wouldn't I want to game the system?
Well, because when you game a system, that means that you're playing outside of the rules. You're coloring outside of the box, and that's not what we want for insurance. And unfortunately, that's what we have been seeing. It's insidious to our industry, and it just seems to have become the norm, more so than the exception in the last few years, which has called for task forces to be created, like-minded colleagues in the industry to, form ranks to combat this sort of thing. And I'm happy to say that it's moved the needle.
Are you going to
keep
us in suspense, or are you going to describe how it moved the needle?
So, you know what? Sometimes when you talk and you say a lot of words, it's kind of nice to let it rest for a minute in case other people want to say words. I've been told I didn't do that enough. So, what I'm seeing, or what has been happening, and the reasons for the task force was mainly built around the facility association. For those who don't know what it is, in Ontario, it's mandatory to have insurance. And whenever a government body makes something mandatory, they have to provide a facility for which you can get that thing that they've made mandatory, hence the name Facility Association. It is a group of insurers that must contribute to this Facility Association pool in order to have reserves and available money to pay claims. And it is what we call an insurer of last resort. So if the regular market will not take you for any number of reasons, exposure, experience, bad experience, high risk, you will be sent to a facility association because of the mandatory requirement to have insurance. It was originally created more so for private passenger vehicles. And it was originally meant for people who had history such as DUIs, where a regular market wouldn't be wanting to offer insurance to somebody who had a DUI. Hence, the last resort. It's a good place to be if you need to rehabilitate your reputation, your experience. Things happen. If you've had 3 or 4 accidents, and not terrible catastrophic ones, but too many for a regular market to take you in, you need to have a facility in which to go and get insurance. So that's how it was born out. And it was really, that was the intent of it, and it was working. Recently, and it pains me to say this, but insurance individuals such as brokers have found that commercial trucking can benefit from the facility association in a way that is gaming the system. Now, as we know, facility association last resort is going to be much higher premiums, 3, 4, 5 times what a regular market would offer for cars, for private passenger vehicles.
Just before you go ahead, I just want to make sure that everybody heard that 3, 4, or perhaps 5 times higher than the regular market. Sorry, I just wanted to throw that in there.
Well, and see, here's the conundrum is that you are afforded the facility because it's mandatory and you have to have it and everything, but some people shouldn't be driving. And so if you've had 3 or 4 accidents or 2 DUIs and you still have a license, you're going to pay. You're going to need to pay 3, 4, and 5 times. If you've been put into facility for other reasons, such as a bad loss experience, or you're going to have to pay double the amount because you're double the risk for them because you've proven that you have accidents. So, it's relative. It really is. What is a hardship for some of the commercial operators is, they are first-year operators. They have never had a CVOR or a level 2 CVOR of their own authorities. And their only option as an owner-operator is to go to facility because our insurers over the past few years have been bit hard by new businesses coming in. And they're either what we call chameleon accounts, or they're sliding out from a bad CVOR and getting a new one and thinking, I'm going to start fresh again, but it's the same guy. And so our insurers can't really tell the good guys from the bad guys, not on paper. So they make the business decision to say, if your CVOR has not been enforced, attached to an insurance policy in the last 3 years, you're not getting insurance from me either. And they had to do that to protect themselves and to protect their capacity, their capital, and their clients that they have on their books. So that's where I feel the hardship is, and that's where I feel bad is new owner operators who want to be an entrepreneur and actually were the lifeblood of trucking from the beginning of dereg, and they have to go into facility. So, and I can cite examples of a fellow going north south and new CVOR, and he was rated at $68,000 for his tractor and his trailer.
Oh. How can these guys afford such a premium? We're complaining that margins are not big enough to begin with.
And that's the thing. Most of the fellows that come to me and I have to tell them that story or give them that premium, they don't. They decide that, and my advice then is to lease on with a reputable fleet, with a really good operating record and a great onboarding and follow through a mentorship and all of that kind. Get your years there. Get your 3 years. You can still be an owner operator. You can still own your vehicle. You're just leased under a fleet. But it's giving you the experience that in 3 years, now you can say, I've been an owner operator for 3 years. I have my own CVOR. I haven't been using it. It's been dormant, tell the truth. However, you've now got your 3 years as an owner op with a CVOR. So that's, but when we're talking about gaming the system, those are the good guys. Those are the guys that are doing the things right. when we're talking about gaming the system, now we're gonna talk about guys that have trucks in Ontario, which is probably the highest rated facility province in Canada, operating and being dispatched out of Ontario, that have been given some bad advice. Some advice from, unfortunately, some of my colleagues that will advise them to open a company in another province which has lower facility rates. Hence the Alberta Limited companies, Nova Scotia, New Brunswick. You guys see them all the time, I'm sure, when you go in and you say, well, why are you registered in Alberta? They don't dispatch out of Alberta. All they have to show their major miles are in Ontario and then south of the border. But they've been advised to go there, and then they get rated out of the Alberta facility book, which is totally unfair because they're not traveling in Alberta. They're traveling in Ontario, and they should be paying Ontario premiums.
Now,
so what happened with the task force? Oh, sorry. And now
I was going to say, what are the changes? Because you've mentioned that there's a task force. Are they tackling this issue? Well, sorry.
Yes. So as of November.
Sorry, what is this task force? Can you explain who it is or?
Yes. So the Facility Association gets money. It's by other insurers. So on the task force are insurers who are paying into this facility pool, insurance brokers, trucking associations such as the OTA, and just like-minded insurance individuals that really put the push on the Facility Association. Facility Association was there, the MTO was there. There's really some really great stakeholders. So what came of it was, because before in facility, all you had to do was give a truck ownership and an abstract and tell them where you went.
Yep.
And say, give me insurance. So with the task force and all the talking that they did and all the strides that they made, November 2020, now you must submit international fuel tax returns to show where you go, where your exposure is. You have to give the abstract and loss experience from where you come from and your level 2 CVR. So now the facility is acting more like an insurance company does, where they're vetting you. Mm-hmm. So if you have an Alberta Limited company, and all you have to show your concentrated miles in Ontario and South, they're going to say, you're going to get rates in Ontario. We have to rate you where your exposure is. Prior to that, there was no exposure rating. So they should be applauded. That task force was amazing.
Yeah. Can a facility insurance provide coverage?
I'm sorry?
Can the Facility Association decline coverage?
No.
So it's all about, the only way to drive it up is with the price.
Well, and that's it. And I mean, that's basically been a principle of insurance for a long time, right? I mean, you surcharge on different criteria, filed rules and rates, right? So we'll take you and we'll charge you this for that. So, but facility is like way more. So I believe facilities through Alberta now, they've really done their job in Alberta, and they're moving on to New Brunswick and Nova Scotia.
Good. Excellent news, because
and you don't have to be on the task force. You can even just be a broker that says, why am I getting all these calls from guys and their loss runs are all coming out of Alberta, or their loss runs all say facility Nova Scotia. So then you have a frank conversation with the insured and say, why? Well, because my broker told me if I went out there, I get cheaper, but now I'm like, So you get caught and you get
catching up on them.
And sorry, one negative comment. It's about flipping time, the Facility Association. Well, Lisa, you're the insurance expert. So if I say this incorrectly, please pipe in and say it the way it's truthful. It's my understanding that all the regular market insurance companies pay into the facility market so that the facility market can exist. And so if we're abusing the facility market, then all of us who pay car insurance or commercial trucking insurance, whatever, our rates go up to compensate.
Well, the insurer has to get the money somewhere.
Right.
I mean, it doesn't grow on trees for them. So everybody, in effect, everyone is paying.
Right. And that's not fair. I'm sorry.
No.
Raise your hands if you think your car insurance rates are too high, but
yeah. But when you talk about fair, you have to think too, what's fair to an insurer that hasn't had a loss ratio under 100% in 10 years? That's not fair.
No.
But they stay and they're still here. So, they're in it to make money as well, and survive. But honestly, I don't know of any regular business that would constantly break even or lose money for 10 years that stuck around and kept doing the same thing. And our traditional truck guys have done that.
Well, and what some of our listeners may not appreciate is the fact that insurance companies have shareholders. And those investors expect a return on their investment, a positive return. So,
Yes.
they have people to answer to too. And, can we deviate a little bit and talk about, and I don't think this was planned. I know it wasn't planned. This whole conversation really wasn't planned other than we're talking about facility, but why wouldn't a trucking company go to Manitoba as an example, a province that has government-run insurance? After all, I'm told it's way cheaper.
Not anymore. That used to be the old line too about going to the U.S. Do you remember the guys used to always say, I'm going down to the U.S. Their rates are so cheap. Well, I'm here to tell you, they're not.
Yay.
And the same, I have some fleets that operate terminals out of the U.S., and I work very closely with the U.S. brokers. So I see the policies. I see the premiums. They're not much different than ours.
Wow.
And why wouldn't you go to Manitoba or a government run? They're cheaper. No, they're not. And then you have to deal, and in commercial, you have to deal with their underlying or their primary is with their plate. Then you have to get access because your trucking company that's doing north-south, you're going to need way more than the province can provide. So now you've got another broker. Now you've got another insurer. It's not really that easy, and it's not cheaper.
Yeah. Well, and I understand that those government-run programs through certain provinces, those groups are much more diligent in making sure you have a location in that province, other than just plates and a P.O. box.
Well, again, stories. 10 years ago, bunch of everybody, let's go to Manitoba. Let's run out to BC, and they all get kicked back too.
Yeah.
Because if you physically having a PO box isn't going to cut it, so then they're like, I got a terminal. My brother-in-law is the resident there, because you have to prove to the government that you're contributing to the community. Yeah, well, his brother's a baker, and he goes and picks up mail there every once a week. They've got auditors just like we do at the MTO. And they can show up, spot check, and they can knock on a terminal. If nobody's there,
I was going to say the shed in his backyard doesn't quite make it as a terminal.
Hey, Lisa, you used one phrase earlier that can you please define it, just in case somebody doesn't know what a chameleon fleet is?
Good question.
Yes, our lovely chameleon accounts.
Well, what is that?
It's derived from exactly the chameleon, who changes its colors to suit its surroundings. So what they will do is, I have ABC trucking. I run my level 2 up to 94%. I have no safeties in place. My SMS has got alerts all over the place. My ISS is 90. Oof. I got to get away from this. I've got to get away from this, from the name, from the history, from the scores. So then he gets brother, uncle, daddy, or whoever to go in and write their CVR test, go on the articles of incorporation as a director or secretary, and they are the front of the company. However, management hasn't changed, vehicles haven't changed, and culture hasn't changed. So there's our little chameleon. Once a bright purple little penny over here is now a little green penny over here. But nothing's changed, and he's going to do that again.
Yeah.
So we are combating that as well. Well, sure. And I mean, and you've heard the saying, I've got a CVR, I got level 2 in my back pocket just in case you need it. And guys have behaved like that for years.
Yeah.
But here's the thing, the MTO now cross-references VINs, plates. And I mean, this will get out, and then they'll get new plates. And then they'll, get a different truck traded in for same model, so the VIN's different. Like, that'll happen, I'm sure. But for now, we are combating it through cross-referencing. Because I can tell you, now our little purple penny, who goes to get his CVR under his little green penny, and they compare VINs or addresses or phone numbers, and they had a conditional under 94% safety violation rate, their new little green penny gets a conditional off the hop.
Yeah.
And as we know, insurers won't take a new venture with a conditional CVR.
Right.
And
so we're following the breadcrumbs, and we're trying to pick them up as fast as we can, and then put Smarties down for their next little.
No, the MTO, I think, has done a great job in reducing those chameleon fleets, because they're watching, as you say, the trucks, the trailers, even the drivers. Like, when they all move from one CVR to another, that raises a flag at the MTO. And so they've done a great job in helping reduce that. I don't know that it's eliminated, although I have to say in the last 5 years, I really haven't seen it anymore. But
no, because they've been diligently, because the word got out. If you're going to get a conditional, brand new shiny with a conditional, what's the point? Why go through it?
Yeah.
Now, you know what our next step is? Honestly, our next step is MTO talking to finance, IFTA. Because as you know, we're self-reporting when it comes to kilometric travel, which is another gaming of the system. So we up our kilometric travel to lower our violation rate, right? I hope I'm not teaching anybody anything. I hope this is pretty much common knowledge, but anyway. So
you're going to get phone calls now. Geez, how do you do that?
Really? What did you mean by that? What did you mean by that again? No. But if we could have IFTA talking to MTO, there'd be no self-reporting.
Yeah,
MTO would use the kilometric travel right from the IFTAs.
Yeah.
Well, and
it's coming.
Not everybody uses IFTA, though. Those who stay in Ontario, for instance, wouldn't. However, what's coming next year?
ELD.
Yay! For Ontario-only companies. So it'll be interesting to see if during an MTO audit, for instance, they get those reports and start comparing those reports to, I strongly suspect they will, obviously.
And also, too, though, but we're starting the discussion has been started about sharing data. So if our guys would share data with their insurers, well, it's only a matter of time before the MTO asks for data to be shared as well.
Tap into that.
And
resource.
look around at the private passenger vehicles. On LIA, and pay what the Liberty, just pay for what you need, and we're not far off from that. And that's data sharing.
Yeah, and I think you're going to see that come quickly to the commercial industry. If you are truly operating a good fleet, and this is going to help reduce your insurance, why wouldn't you?
Oh, for sure. Oh, absolutely. I just went through a renewal where we were virtual, and one of my fleets shared their screen of speed gauge, where it shows the hard braking, the hard left turns, all that kind of stuff. And he was sharing the videos with my insurer partner, and they were just like, wow, like, I would love to get my hands on that. And he's like, anytime you want it.
The sad part is, it sounds like it's a lot of effort on behalf of the motor carrier to game the system here. Where if they invested half that effort into putting into place good safety programs, training processes, and managing their risk on a regular basis, they'd do a lot better.
It would be much better. It's more upfront work. It's more diligent, and it's more of a responsibility. But gaming the system is all about shortcuts and instant gratification, as in revenue.
But
so when you do all the things that you just talked about.
Yep. But it's a constant process to keep that going. Whereas if we implement good controls and best practices and just maintain that, it's a lot less work down the road.
Absolutely. Absolutely. And now the chameleon is getting caught more and more often, and the conditional CVRs are being issued. They're going to see that I can't keep doing this, because guys have done it 3, 4, 5 times before they're actually shut out, right? That's not happening now. So they can maybe do it 2 or 3 times, but why do it at all? And I get your point, John. I really do. I agree. And so they'll get there, 5 times, 3 times, 2 times. Okay, let's just do it right.
Well, especially after they pay 3 to 5 times more for insurance through facility, when if I just clean up my act, I could have saved a ton of money, if not made money.
Exactly. It's the long play.
Yeah. And let's be honest. They could have hired one of us, John, to help them and put money in our pocket.
And more money back in theirs. Exactly. Yeah. So, and a broker like Lisa, they could have got highly educated in this whole process. So there you go. The 3 amigos should be hired by these people regularly. Simple as that.
Oh my God, I'm so glad we didn't rehearse anything, because I would have let that in. You guys.
I tell you. So we're not gaming the system.
No, we don't want to game the system. We want to work within it, and we want everybody to do the same thing. Because for the 60% that are working the system, the 40 are making it that much more expensive and harder for the 60 to go and do their day-to-day right.
Yeah. Is that just an example? Like, did you just pull those numbers out of the air, 60-40, or is that a true known ratio?
It's not a statistic. In my experience, I believe that it's not far off.
Oh, you've shocked me in that only 60% are doing it the way it should be done. I would have thought, quite honestly, it would have been like 80, and then 10 or 20% were. Yeah. No,
would have hoped so.
It used to be like that, Chris. Honestly, you would get, the renegades that thought, I'm the smartest person in the room, and I'll never get caught, and I can do this. And it used to be few and far between. It used to be the exception. That's true. But unfortunately, word of mouth and being taught, like, for an example, think about this. So even in my industry, so a broker is a seasoned broker, and they've been in the business for 30 years, and they are tasked with mentoring and bringing up new producers. Mm-hmm. So they're working on a 21B fleet, and they say to this young fella,
hold it. What's a 21B, just in case somebody doesn't know?
Sorry. So they're working on a fleet basis where they don't have to report each and every driver or tractor throughout the term. They have a fleet. But now they do have to report to their insurer, say, on a quarterly basis. So say this ABC fleet has 200 trucks. And the seasoned broker says to the young fella coming up, listen, when they send you their list of vehicles and drivers, take off the bottom 20. The newest, take off the bottom 20. Then you send that into the insurance company. So the young fella believes he's being taught an SOP, standard operating procedure, right? So he doesn't know any different because he's being mentored, he's being brought up. I guarantee, and from fact, my own experience, I know it's being done. And that's terrifying to me.
Sure.
And that's hiding units to save premium. And when I say the 60-40 count, that's a lot of it.
Well, and that's unfortunately kind of an approach that we've seen with mentoring new drivers. Shortcut. make it quick. Get him on the road as quick as possible. Give him what he needs to know just to get going and get the keys in his hands, and down the road he goes.
It's so true. So the onus is on us who have been in the industry. We're the right doers, the right fighters, the right thinkers. We're the ones that should be, we are. I have 2 mentees working with me right now. And that's like, I'm going to tell you what we do. And I'm going to tell you, here's what you're going to hear because there's a young brokers network. They talk to each other. I do not want my mentees listening to any of that and having that, creep in to their day to day. But the young mentees that are working for that broker that's giving them this information, like it's a shame for them. They don't know. They don't know what they don't know.
Well, as you say, if they are taught that way, they think it's the norm and the correct way to do it.
Yeah.
So,
yeah.
Lisa, last word. We're heading up on 30 minutes already. I can't believe it.
Wow. She talks a lot.
There it is. Oh, man.
You can hit him later. I know you're not in the same room, but it's coming soon that you'll be in the same room. Just save it up, Lisa.
My last words would be, you play games, you work a system. You don't do both.
Mm-hmm.
Thank you so much.
Yeah, awesome.
Johnny, you want to wrap this one up?
You know what? Do it the right way, and the return on investment will pay for itself. It'll come back tenfold, but you're just going to pay. Cheaters always lose.
Thank you, Johnny. And that's it for this week on the Trucking, Risk, and Insurance Podcast. Yay! Thank you to our guest, Lisa
Thanks for having me.
Of Stabler Insurance. Thanks, Lisa. Appreciate your time.
Thanks for coming out.
Appreciate you.
Thanks for having me.
And a huge thank you to our guest, Lisa Arsenault, and my co-host, Mr. Johnny Farquhar. Thanks for tuning in, John of Summit Risk Solutions. That's it for this week. If you're getting value, please like and subscribe because it really does help the channel so much. Safety Dogs out. See you next week.